More pain for homeowners, interest rates, mortgage rates, the rate you pay is going up again. That is because there is some volatility in the swap rate market. That's where the banks borrow their money. It's mostly down to inflation. I'm going to cover in this video which big lenders have put up their rates, what can you do, where things might end up in the next few months, and much, much more. So before we jump into this video, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification. We've got new content every single day on this channel. You don't want to miss it, so subscribe over there. And while you're here, smash the like button, tickle the like button, do something to that like button. That really helps with the YouTube algorithm. It gets more views on the channel. It just means you're an all-round great person if you do it. So what's going on? Well, the inflation data that came out last week wasn't received very well. While inflation in the UK is down, it's not down enough. We've also had the Federal Reserve in America talking about their worry about American inflation. And what's happening over the pond in America is their inflation is really starting to stick now. Now, inflation in the UK is relatively high still, but it's been moving in the right direction. We had a few months where it was pretty much the same, but on the whole, it has been moving in a downward direction. America, on the other hand, they got it down to 3% fairly quickly, which was great, but it got stuck and it's not moving anywhere. And that is what's causing the alarms as well. And so when you borrow from a bank, they borrow from a bigger bank, and the rate that they get is something called a swap rate. And any uncertainty, for example, Israel in Iran, that was uncertainty. You got oil price uncertainty, and coupled with this inflation stuff has meant that swap rates, the rate that they're willing to lend at, went up. Now, a lot of lenders acted quite quickly on that, and one lender in particular has increased their interest rates, the mortgage rate even, that you can get twice in a week. So let's talk about which lenders have been putting the prices up, what can you do to protect yourself, and where might rates end up by the summer. So it seems most lenders have put their rates up. So I've got a list here of ones that have done for sure. And we covered this. We do a weekly video, just in case you're new around here. I do a weekly video on the best mortgage rates, and 80% of them increased this week. We cover buy-to-lets, HMOs, residential mortgages, buy-to-lets in limited companies, and much more. So do go and check out the videos on the channel if you want to know what the best rates are at the moment. But recently in the last week, you've got Nationwide that have put their rates up. You've got NatWest that have put their rates up. Halifax have put their rates up, BM Solutions, and Virgin. And what has also happened is Santander, well, they put their rates up twice in a week. The average increase at the moment this week from lenders is 0.25%. So what impact's that going to have? Well, it means when you renew your mortgage, if you're looking to move on to a new rate, it's going to be more expensive. It also means affordability is going to be tougher. That could impact house prices. 0.25% might not seem like much, but it might mean that you could borrow $5,000 less when you're buying somewhere. And if you buy somewhere for 200 grand, $5,000 is 2.5% that you can't afford to pay extra on that property, meaning you might have to offer less. And the seller might have to take that, because that could be the same for all the buyers that are considering buying a property. So it can have a big impact on house prices, affordability, and all sorts of stuff like that. And obviously, who wants to pay more money? No one, right? I don't. And so what I feel is going to happen here is that I think the next week is probably going to be fairly flat. I don't think you're going to get lots of lenders putting up their rates again. I think they're going to wait and see what happens with the next inflation data in the middle of May. That is going to be really critical. Now, in that data, the UK is expected to be at 2 point something because the energy cap dropped. Your energy bills have probably gone down more recently. And that is going to have a big impact on the inflation data going forward. So that's good news. And so if it doesn't though, if it doesn't and the inflation doesn't go down as much as expected, that could be bad news. And in that scenario, the swap rates will go up, then your mortgage rate, the rate that you can borrow at, will go up again as well. So I think for at least the next 2 or 3 months, it could be quite volatile before, when the Bank of England starts dropping rates and the Federal Reserve start dropping rates at the end of this year. At that stage, you might see some improvements. Now, we felt that rates might get close to 4% by the end of this year. I'm not seeing that as likely as it was previously. I think rates are going to stick in the 4s, late 4s, early 5s. I think that's the sort of rate that you're going to get. I don't think you're going to see massive jumps up or jumps down with rates this year. So what I would suggest that you do is, if you have an interest rate that ends this year at any point in the year, try and fix it today, because you can be certain what the rates are today. You can't be certain what the rate is in the summer. It could be way worse. And in that scenario, if you fix it today and you don't start that deal till the summer, between now and when you start that new rate, you can switch on to that lower discounted rate if they improve that, right? So if they drop the rates, you can switch on to that lower rate. But if they don't, you've secured the best rate possible. So it is quite unpredictable. In fact, there was something that was really crazy that could make interest rates drop close down to the 1% factor again. I made a video on that over the weekend, so go and have a check out. It's all about Donald Trump, which I didn't think I'd be talking about too much on this channel, but go and check out what could potentially happen if Donald Trump wins the election. And the chances of him winning the election are pretty close. He's actually winning in the polls at the moment, so he could be the next president of the United States. If that happens, there's some big changes potentially coming at the Federal Reserve. So what do you think about these mortgage rates? What do you think is going to happen this year? I'd love to know your thoughts and opinions. Every single comment that you guys put on the channel, I personally reply to every single one. The good, the bad, and the negative ones as well. So do go and make a comment. I'd love to know your thoughts and opinions. And if you found a good mortgage rate, we're a community here. Share it. I know some of you maybe haven't met, but you've met in the comments on the previous videos and stuff like that. Share any good things that you've got that we can look at and talk about on the channel. If you've got some ideas for some videos as well, do comment that below. Do check out the other content on the channel. Did you smash the like button earlier? If you didn't, go on, smash it right now. Subscribe, hit the bell, check out the other content on the channel, including this video right here.